What's up YouTube, it's Louis here, I hope you're well. Today we're going to look at the indicator, the 69 EMA and the 55 EMA, which is basically telling us that the bottom is already in. I did make a YouTube shorts yesterday, so if you already watched this, today is just going to be a more in-depth version of it. We'll also look at the lower time frames. And if you enjoyed today's update, let's try and get this video to 100 likes and let's get this channel to 3.2k subscribers. Come on guys, we can definitely push for it today. Now we can see that we've actually met our technical target over here. If we zoom in on the daily time frame, 24.5k. How did I get this target? Well, we know with a double bottom, and we saw this double bottom over here, and usually with a double bottom I put the neckline on the body over here. I put it actually right there, but in this case we had a wick over here, a rejection where we put this low over here, and of course we had another go at it, failing to close above that wick. So for me, I was telling you all that this is the true resistance, 21.7k. That was the true resistance, and you can see we kept on going to 21.7k and getting rejected. But every time you got rejected, you failed to put in a lower low. We have a low, a higher low over here, and then another higher low over here. So we're printing high lows. Go check out my video from yesterday. It's very short, it's only a minute long, and make sure to go like that video, of course, if you want to see more YouTube shorts. But of course, over here, before I went on holiday, I left you with the only bearish scenario at that time, which was the rejection of the 55. I told you the only thing that the bears can actually say is that we've run into the 55 daily. Previously, we've rejected it when it's happened over here, and then we made a lower low. And we continued this downtrend. But on this case, you didn't make that lower low. The bears did in fact take power. You see that we did close below the 20, and you actually came back down to this previous low, and that's not even the main low. We were saying, remember when we got rejected here, I said for the bears to have any validity, you need to break 18.6k, which is this wick here. Did we break 18.6k? No. So there's no lower low. So all these guys for the last month, so just check out all the people since the 18th of June, what they've been saying. They keep saying, oh, downtrend, this, that. It's had its chances of screwing us over, and I'll show you, in fact. The bears have had their chances, and they haven't taken them, and they've had multiple chances. And I'm going to show you all the chances before we go into the indicator that signals the bottom. And if you're enjoying this video so far, if you're new to the channel, please subscribe, leave a comment down below so I know who you are, and let me know if you're enjoying the videos or finding value. Even if you're a returning subscriber, let me know that you missed me in the comments down below. While I'm back, and hopefully I can do the updates for you guys every single day, including the quant update, and of course some more now that we're doing some nice things. But there's still some things that we need to do to continue being bullish, like holding these lows, but we'll get into that in a bit more detail later on. So here we have the 1 fib and the 0 fib, and we had this impulse from the top, from the swing high to the swing low here. Then we retraced basically, and we retraced into the golden pocket, and we should never break above this if this is going to continue with the trend it's already in. And this is a downtrend because our impulse was down, and we're retracing back up. We're correctively coming back up. That means we're not bullish. That means we're actually technically bearish. And what should happen is you should never actually go above this orange box, and we should actually continue lower. So that's signaled by that shooting star over here, because you actually never closed above it. You were above it. Did you close above it? No. So that's why I took that wick as the resistance, because I know there was something here to push you back down and close under the golden pocket. So I've always draw out the golden pocket, but there's also rejection there. So that's why I dragged it forward into the future. If you appreciate me sharing all these secrets, then of course smash the like button. I do also have education available. I do have mentorship. 2 spaces have opened up on the mentorship, so get them quick, because before I went on holiday, we had 5 people take some spots within 1 week. So these will fly. If you really are interested in doing mentorship, just message me on my Twitter. Not a lot of you are following me on my Twitter. There's 3,000 of you here and only 1,000 following me. I actually post more on Twitter than I do on YouTube, so go check out my Twitter. Second link under this video. My Twitter is the second link, or the first link under this video, Louis_crypto. Now let's continue. So we should have never continued up like this. What should have happened is with impulse, correction, continuation, just like that. Okay, you didn't get that. Did we break this low? No. Did we even break below the bodies here? No. So you didn't close below the bodies or the wick. So how is that bearish? For this to be bearish, for this to be a downtrend, you need lower lows, and you couldn't even close below the body or the wick, let alone the wick, and you need to break the wick, in fact. So you couldn't do that even with this rejection, and you held this the golden pocket. So what's happened is you should have put the lower low, you didn't. You started to create this reversal wave by holding above it, but then you fell back under, invalidating the reversal wave. What a reversal wave is if we can actually close above the 618 or this golden pocket and hold it as support, we should actually continue to the 1 and then to the 1618. Okay, it's like that, but we actually failed to hold this level as support, so you invalidated that reversal wave like that. So by losing this support and going back under and confirming it as resistance right here, can you see we confirmed this 12 EMA as resistance? Let's go back. Where's the, sorry guys, there we go. So you can see we held this 12 EMA as resistance on the daily time frame. That's extremely negative, and we are back below the golden pocket. So that means we should do what we should, because this was an impulse, this was a correction before continuation and losing the low. You had your chances, you're under the 12, you're under the 20, you're under all of these, but did you make a lower low? No. So I keep showing you that we actually should have gone down here and here on 2 attempts, on 2 actual times. You have good reasons to lose this low, and you just couldn't. So what's happened? You've put in a higher low, higher than this low, and this is why I'm telling you guys, this is the low that we're focused on, this higher low. And I told you over here that if the bears push us below this, then yes, they are right, and I warned you that. And I was telling you that's the only validity. And if we do lose this low, I'm going to join the bears. I'm going to tell you we're going to go low. I'll probably sell more crypto. And if that ever comes, I'll tell you. But do we have that? No. Are we seeing that? No. What are we seeing? We have a low, we have a higher low, and we have a higher low. We have a high, we have a higher high, we have a higher high. We could keep going forever. Honestly, since the 18th of June, we have our low. If I ever see signs that we're going low, I will let you guys know. Do we have the signs? No. The only thing now the bears can say is we're at the 69 EMA, but they don't even have the 69 anyway. But we're trapped between the 55 and the 69. Of course, if you fall through, you've got this previous resistance now as support. Yes, we did fall through it, and that was another bearish scenario, but we couldn't even break this low, and it wasn't even about this low, it was about this low down here, 18.6k. So the bears lost the 20, we hit the 55. This is our double brick wall. This continues the downtrend. We continue the downtrend by losing our continuation moving average. The 20 EMA is the continuation moving average. This basically means as long as we're above it, we should continue up. If we're below it, we should continue down. The purple one is the 20. So if we're below it, we should continue down and make lower lows. Did we make lower lows after rejecting it and losing it here? So we got above it, bullish, went below, bearish. Did we lose that low? No. So that's a 3rd time the bears could have taken power. This is a 4th time, because this is a bearish trend continuation. We actually went lower than the 20 EMA, which continues your downtrend. We actually got straight back above it. So do you see there's 4 attempts here where the bears actually took power. The bears were in control, but still couldn't make a lower low, guys. So since the 18th of June, and I've been telling you since the 18th of June, if you go to my homepage on my YouTube, the video that comes up first was the video I called the exact bottom on the day it happened, when the new weekly candle opened. So yeah, if you appreciate that, well, please like, subscribe and comment. I know this video is long, but it needs to be so in-depth, guys. Now again, if we lose this, we're coming back down to the 20, where we've got this low holding us up. So just remain above that. Again, if you lose this, you're coming down to here. And if you lose this, we know 100% we're going lower. Until then, you can see we're currently above the 1 fib level. You could actually come back down all the way to the golden pocket. But for me personally, guys, I'm telling you this now, if we can hold above 20.2k, and we are at the moment, we're at 23.8, so as long as we're above 20.2, which we are, we could come all the way to it. But I'm telling you, as long as we're above it, we're actually, and it could be from here or it could be from down here, whatever happens. At the moment, I've invested, so I'm always going to be in profit if we go up. I'm not waiting for a trade. I'm always investing. So my holding money is going to take the moves. If it's down or up, it doesn't matter. But I know for a fact, if we're staying above this golden pocket, and I'm telling you the price of 20.2k, then we should continue to 27.7k right there. And then if we start coming back down and hold the 1 fib level, I don't even care if we come back down all the way to 20.2k. As long as we can, and you can see that would be a massive push and a massive correction. So we could be seeing a correction soon. That could happen now. That could happen soon after the 1618. Whatever it is, if we see the correction after hitting the 1618, as long as you remain above 20.2k, we should actually continue even higher to these two technical targets. Again, the 200 EMA at some point will act as big resistance, but that's pretty much it. Apart from, I need to show you the bottoming indicator. I know this is such a long video, but again, as I've shown you in the past, when this crosses over, and we can see it's now actually crossed over, the blue one going over the orange. When the blue goes over the orange, we actually have the bottom, and I'm going to show you this previously, and this is the weekly time frame. Let's get rid of these drawings. So when we saw this bearish cross happen, it's a lagged indicator that I completely came up with myself, that I teach you about in the course and in the mentorship. But yeah, once this appears on the Bitcoin chart, look, it's saying that either the higher low is in, the higher low is forming, but basically when this formed, it tells you that the bottom was in prior. Regardless of what's happening now, when it crosses, the bottom was in prior, and that should be the higher low, or that the higher low is about to form. Now over here again, we've seen it cross over right there, and when it crossed over, the bottom was already in prior, and I've shown you this in two bear markets now previously. So this is backed by data. This is, yeah, data driven, and yeah, it's not out of my bum. Everything I've spoken to you about today is all in my education. If you're interested in that, please head over to my Twitter to get you started as soon as possible. I've only got 2 slots left. Get them in before the end of next week, because they will be gone by then, if you really want to start and get these lessons done within the next month, basically, so you can actually practice. Thank you guys. I'll catch you in the next one. Like, subscribe and comment.